The US dollar started the year on a high note. Representatives of the US Federal Reserve support the national currency. Suggestions that the Fed may keep interest rates high for an extended period beyond the US dollar's demand high among traders who use a carry trade strategy. At the same time, the hawkish rhetoric of the policymakers is based upon the assessment of the state of the US economy, as shown by the latest macroeconomic reports. In our video review, we will discuss what data will be released at the beginning of the new trading week and how it may affect the financial markets. You are watching the Traders Calendar on InstaForex TV. The flow of important macroeconomic data will begin on Tuesday, January 23, with the announcement of the results of the Bank of Japan's meeting. Notably, the Japanese central bank will not make any drastic changes, as the main condition for changes is defined as a stable inflation growth over 2%, which should be ensured by stable wage growth. The inflation rate slowed to 2.6% in December, which is still below the central bank's target. Meanwhile, the damage to the economy caused by the recent earthquake in Japan may force the central bank to keep its monetary policy settings unchanged to support local businesses. At the same time, considering the recent hawkish statements from the US Fed officials, traders will prefer the US dollar to the Japanese yen. Looking ahead to the next day, investors will continue to focus on a macroeconomic data from Japan. Close attention will be paid to the foreign trade balance report, and the export-oriented economy is likely to remain in a negative territory, with the volume of imports once again exceeding the volume of exports, which are declining due to sluggish demand for Japanese goods from China, and the market's sentiment to sell the Japanese yen will likely remain intact. On Wednesday, the Market Research Group will release the preliminary index of business activity in the world's major economies. Notably, the trajectory of this indicator is often in line with the GDP growth curve. As a rule, the only difference is that GDP follows the PMI. Thus, the recessionary trend in all sectors of the economy, including German industry, is likely to continue. The PMI composite is still below the 50 level, and it's a signal to investors that the German economy, the largest in Europe, is slipping into recession. Most likely, investors will sell the euro in favor of the US dollar against this backdrop. In the United States, the PMI is still in the expansion zone. According to the forecast, the composite index is declining and is approaching the threshold that separates the expansion from the contraction. In the US session, investors will pay close attention to Canada, where the central bank's decision on the interest rate will be announced. Markets are sure that the Bank of Canada's board will not cut interest rates before their US counterparts do the same. Since the representatives of the Fed are now showing hawkish rhetoric, Canada's regulator is unlikely to decrease its rates. Meanwhile, investors will also scrutinize the central bank statement at the end of the meeting, where there may be hints about the plans for the rate, and we will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.